Hey everyone, Codex here. I hope you're doing great after getting obliterated yesterday. And so today, what we're gonna do is take a look at Elrond's native token Egld, and we'll be discussing this current move down below our accumulation zone to help you understand how you should be preparing yourself for what's coming next, because we've got something very important coming for us tomorrow. So if you guys like the content, make sure to like this video, subscribe to the channel if you haven't already, and make sure to join our Patreon account. So, we all know that the last 2 days have been pretty brutal for the entire cryptocurrency asset, and this has led Elrond to drop below this accumulation zone, which was basically our support since the summer of last year. And although we went down below this level, and despite being down about 80% from our all-time high, which is a lot, we must give EGLD just a tiny bit of credit for not pulling something like Luna yesterday. I mean, despite being down a lot, which we can't really ignore, Elrond has managed to get through the latest storm with as less pain as it could. Now, Elrond is currently below this area, which was our main buy level, as I said, and we know through the VPVR indicator, which displays our supports and resistance, that this area has a whole lot of interest in it from buyers, because we've got a horizontal spike. Meanwhile, in this area, we don't really have a whole lot of buy orders, and so don't be shocked if you see a continuation of this downtrend to this reaccumulation zone, which is between 80 and 90 US dollars in this second quarter. I'm not saying today, I'm not saying tomorrow, I'm saying this quarter, which is from now till the end of next month, till the end of June. And fun fact, we have discussed this area about 3 or 4 months ago when we were in here, and I say that the odds of dropping to the next accumulation zone are very high. And you can see that despite these two pumps, our trajectory hasn't really changed, and we are still following our path. If we take a look at the KDG now, which is a momentum indicator, what we can see on the macro scale is that the black line is still below the level of 20, and we don't really have a bullish cross yet between the ascending blue line and the orange line, and so things are still bearish. What we need on this 3 days time frame for our bullish momentum to prevail is this black line to trend up high, we need this black line to trend higher and shooting towards this upside, and we also need the blue line to win its upside race against the orange line like it did in here or also in here, and at that time we could start talking about an uptrend once again. I do honestly expect a reversal to start soon. I'm not gonna claim that I know exactly when it will take place, but what I would say is that the odds of seeing a move up within the next 3 to 4 days are pretty high given what has happened so far. I do believe that a recovery will happen earlier than expected, because that's the nature of the market after all. We should also know that we've got the CPI release tomorrow, which I think will be the most important CPI release this year given the current sentiment. And if we end up seeing a horrible number than expected, this move down will just continue. The forecast is at 8.1%, and the only way for us to cool down a little bit is if we get a number below it, or if we get 8.1%. I mean, if we end up seeing another 8.5, for example, which I doubt, because that's a bit high, that's a bit far away from what we are currently experiencing, then I would say that you should file for bankruptcy, to be honest. I don't want to be pessimistic, but I want to remind you that every number we've got in the last 12 months was higher than the forecast. Every single number was above the expected. And so seeing a lower number tomorrow, or at least knowing that inflation isn't increasing anymore, will give investors more confidence. Things are bad, and there isn't really a way to hedge against this drop, to be honest. I mean, even if you keep your fiat, you would be losing a lot of money to inflation, but still, I think it's better than losing 50% of your money in a few days. I remember that I said that inflation isn't priced in a couple of months ago on my Telegram channel, and that it doesn't make sense to me to claim that it is. And we know we can now see that inflation isn't priced in, and we can also conclude that Bitcoin is far from being an inflation hedge. And so I really want you to understand these two, because a few months ago, whenever you ask investors in this space about inflation, their only answer was that it's priced in and that nothing bad will happen. And look, 2 months or 3 months forward, things are looking bad. Going back to Elrond, the price is still below the 50 weeks moving average, which is currently at 185 US dollars. And we are also below the bull market support band, which is at about 160 bucks. And these are basically the first two main levels that we need to break above before even mentioning a bullish rally again. we have really been failing to reclaim these two in the last 4 months, and we got rejected in here and also in here from the moving average, as I said, and from the bull market support band, and that's not a good sign. And so, as I said again, the day we trend up high and go above these two, we could relax and start talking about how the next uptrend will look. I do believe that we will see a move to the reaccumulation zone sooner or later this year. I honestly don't know when exactly, because we have the release tomorrow, which could change the entire equation, and so we will see how things develop. So that was about it, guys, for today. Remember, tomorrow is the CPI release. If you are heavily exposed to the stock market or to the cryptocurrency asset, you must look at the numbers. So thanks again, have a nice day, like the video of course, and always remember that there is more to life than crypto. Bye bye.